Are you a small business owner struggling to find the right funding option for your working capital needs? Do you feel that only big companies get bank funding while small companies are left behind? Are you looking for the best government schemes that can provide subsidies or loans to you for your business as well? Do you want to raise funds but don't know whether you should go for a bank loan or try to find investors? Well, you're not alone. Almost every business owner feels that way. That if only he or she could raise a little more money, they could literally win the world. But the real challenge is, how do you get that little more money? In this video, I'll give you a complete list of 12 funding options that you can use to start, grow, and expand your business. Here's what we'll cover. 4 government schemes that provide loans and subsidies for small businesses. 4 loan options from banks, NBFCs, and venture debt companies. 4 equity investment options to raise funds without taking a bank loan. So, shall we get started? Section 1. Government schemes for small businesses. Yes, the Indian government has designed special schemes to help small businesses like yours. And here are 4 of the best options. 1. Mudra loan. Who is it for? Small business owners, traders, shopkeepers, and service providers. Loan amount is up to 10 lakh rupees. What's the eligibility? Any micro or small business. For example, Rajesh runs a small tailoring business but lacks the funds required to buy high-end machinery for sewing. With a Mudra loan of 5 lakhs, he expands his operations and hires more employees. Number 2, PMEGP loan, that is, Prime Minister's Employment Generation Program. Who is it for? New businesses, especially in the manufacturing and service industries. What is the loan amount that you can get? It's up to 25 lakhs for manufacturing industries and up to 10 lakhs for service industries. What's the eligibility, you ask? Well, all you have to do is be over 18 years with a business idea. For example, Priya wants to start a homemade snack business, but she needs funds for buying more equipment. She applies for PMEGP loan, gets 8 lakh rupees and starts her business. Number 3, Stand Up India loan. Who is it for? This loan is for women entrepreneurs or SC/ST business owners. What's the loan amount? Well, in this case, the loan amount goes from 10 lakh rupees all the way up to 1 crore rupees. You heard me right. What's the eligibility? All you have to do is you have to be setting up a business. For example, Neha, a young woman entrepreneur who starts a logistics company with a Stand Up India loan of 20 lakh rupees and buys vehicles for delivery. Number 4, CGTMSE. Now, what does that stand for? Credit Guarantee Fund Trust for Micro and Small Enterprises. Who is it for? Well, this one is for businesses that don't have a collateral to offer. What is the loan amount you can apply for? Now, here's the big one. You can actually apply for a 2 crore rupee loan amount under this scheme. What's the eligibility to apply for this scheme? You have to be a startup or a small business owner. For example, Akash, a tech startup founder, needs 50 lakh rupees for his business, but doesn't have collateral to offer. With CGTMSE, he actually gets that loan without any assets to give for security. Now let's come to section 2. Let's talk about banks and NBFC loan options. Now, who is this for? This scheme is for businesses with regular revenue streaming. What is the loan amount that you can apply for? Well, that completely depends on the cash flow and the bank history. What is the eligibility for this scheme? You must have a current account with the bank. For example, a restaurant owner needs quick cash to buy ingredients before a festival for his business. Point number 1, overdraft, OD facility. He uses his overdraft facility to get 5 lakh rupees instantly and then pays it back once his sales increase. Point number 2, term loan. Who is this for? This one is specifically for businesses looking for long-term capital. Now, over here, the loan amount starts from rupees 10 lakhs and moves up all the way to a whopping 50 crores. You heard me absolutely right. What is the eligibility criteria here? Profitable businesses with a very good credit history. For example, a factory owner takes a 1 crore rupee term loan to buy more machinery and equipment for his factory to increase his production. Number 3, working capital loan. Who is it for? Now, these loans are for businesses that need money to run their daily operations. Loan amount here is 1 lakh rupees to 10 crore rupees. If we talk about the eligibility, well, that is based completely on sales and revenue. For example, a trader imports goods but needs money before the customers pay. He takes a working capital loan to bridge the gap. Coming down to point number 4, invoice discounting. Who is it for? Well, this one is meant for businesses selling on credit. What is the loan amount you can apply for? 80 to 90% of the invoice value. What is the eligibility? That's pretty simple. You must have pending invoices from clients. For example, a furniture manufacturer sells on a 60-day credit period but needs cash instantly. He sells invoices worth 10 lakh rupees to a financer and gets 9 lakh rupees cash instantly. Now let's come to section 3. Equity investment options. If you don't want to take a loan, you can raise funds by offering a part of your company to the investors. So let's go further into a few more details, starting with point number 1, seed funding. Now what is seed funding? Seed funding is basically when you take funds or revenue from family or friends. Who is this usually meant for? Usually, this is meant for early stage startups or small business owners. Now, what is the investment amount that we're looking at? So we could be looking at an investment of anywhere between 1 lakh rupees to 50 lakh rupees. What is the eligibility? All you have to do is have a business idea with growth potential. For example, a boutique owner gets 10 lakh rupees funding from a family member to advance his or her business. Now let's come down to point number 2, angel investment. Now who is this meant for? This is typically meant for startups looking for initial capital to start their business. What is the investment that we are looking at? Well, it's usually between 25 lakhs to 5 crore rupees. What is the eligibility? You have to have a scalable business model. For example, a tech startup raises 1 crore rupees from an angel Indian investor to start a mobile app. Now let's come to point number 3, VC, venture capital funding. Now who is this for? It's usually for fast-growing startups. What is the investment that we are talking about? Well, here the game starts getting bigger. The investment starts from anywhere between 1 crore rupees to 100 crore rupees. What is the eligibility? You must show high growth potential. For example, a health tech company raises 5 crores from a VC to expand its business all over India. Moving on to point number 4, private equity funding, PE. Who is it for? This is for long-term businesses looking for a large-scale investment. What is the investment that we are looking at under this? Well, typically, it's always more than 10 crores. What is the eligibility? Well, you have to have a strong financial and proven business model. For example, a chain of salons gets 20 crore rupees of funding from a PE to expand their business nationwide. So what do we conclude from this entire video so far? So basically, we've covered 12 different funding options, 4 government schemes, 4 bank loan options, and 4 equity investments. Which one suits your business best? This is something that you would need to decide and take a decision over. In fact, I would request you to comment below in our comment section if you want a detailed video on any of the business models or modules that you may have in your mind that you would like to start out with, or that you're already into but are looking for further funding options. So do subscribe to our channel for more such videos and share these videos with your friends and relatives as well. Who knows? They might just be looking for similar tips to help them out in getting funding for their startups or their businesses as well. My name is Aditya, I'm your host. Thank you so much for watching this video, and as always, until the next time, signing off.